Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is June 5th, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Let's get started. Looking at the euro versus US dollar, I'm focused on the hourly chart, and you can see that the low price traded yesterday was near the low price today. Moreover, the low price today, actually today's low price was a little bit higher than yesterday's low price, but in trading here today, what did the price do? The price found support against its 100-hour moving average. That's the blue line in this chart. That level comes in at 1.08605. The price has since bounced higher into this swing area through here. The swing area comes between 1.08758 and 1.08871. And trading yesterday, the price rebounded off of this low into the high of this swing area. And trading here today in the Asian session, price also traded near the highs but found willing sellers against that level, and the price rotated to the downside. The high price in May did reach up to 1.08944, and you can see that in early June the price did move above that level up to the high of 1.09149. So what this chart is telling me is that there is still support buyers in this pair. Support buyers come against the 100-hour moving average. Below that is the 200-hour moving average. That comes in at 1.08524. On the top side, there's resistance now at the 87 level, maybe up to the 94 level. If the price can hold below that level, there's a battle going on between resistance up here and support down here and here. Of course, we have the ECB rate decision tomorrow with the expectations of a 25 basis point cut by the ECB, so that may come into play. But those are the levels in play from a technical perspective that traders be looking for a break. Either we move above 1.0894 a second time and move higher, or we move below the 100 and 200-hour moving averages and move lower. Let's take a look at the dollar versus yen next. And this currency pair, man, it's all over the place. Yesterday we fell sharply to the downside. Bank of Japan comments, talks about perhaps cutting back on the bond buying. Sent the price sharply to the downside and into this swing area through here between 154.59 to 154.87. The price did try to move lower. We had two breaks of the low of that swing area. They took their shots and missed. The price rebounded into the closing and trading here today, which has been up until the price started to get closer to the 100-hour moving average. That level comes in at 156.34. I think the high price came in at around 29, so about 5 pips short of that moving average level. And we've seen a rotation to the downside. This level right here at 155.95 is a level that I had earmarked as a level of interest. Why? Because we have different swing highs through here, broke above that level, then broke below that level right through here, and used the level again as resistance right through here, moved above and tried to hold support against the level here, fell below it here, and then reestablished support here before moving to the upside. And over here we found support buyers right here and here before falling below that level on trading yesterday and moving to the downside. And here we are today, back trying to hold support against the 155.95 level. So keep that level in mind, keep the 100-hour moving average in line. Those are the key barometers for this pair going forward, and what it is up, down and up trading so far trading this week. Let's take a look at the sterling versus US dollar. I'll start at the 4-hour chart, and the reason being is that we have this swing area between 127.93 and 128.02, above and below 128 level. Corresponds with different levels through here. Got a little messy there before finding resistance and moving to the downside. Came back up to this area right through here and found sellers again. And it wasn't till last week where the price again moved up to this area and found willing sellers. The trading this week, we did move above the level to a new high, going back to back here in March of 2024. The level comes in at 128.16. But the market failed and then reestablished resistance here and here against the level both yesterday and or maybe is that yesterday? Yes, and today within this swing area. So we do need to get above the 128.02 level and stay above that level to increase the bullish bias. It would be nice to get above the high price as well. And if we are able to do that, it opens the door for further upside. Alternatively, this low right here is near the 127.50, 60-ish type level. 59.60 level is trying to hold support. Let's take a look at the hourly chart, see if it gives us any clues that we don't see in the 4-hour chart. And what we saw on trading yesterday is that the 100 and 200 hour moving average did hold support buyers here. And here's that swing area here around the 60 level right through here. You can see how the price is holding above that level. We actually have a little, marginally higher lows in this pair. But what we can say is that we need to get below the 100 and 200 hour moving averages in order to increase the bearish bias. Those two moving averages are moving toward that 60 level, or at least a 100 bar is, and our 100-hour moving is. So get below that level would be more bearish for the sterling versus US dollar. Absent that, in the buyers need to get above the 128 level and stay above that 128 level. Bonus currency pair I'm going to take a look at is the dollar versus Canada. The Bank of Canada interest rate decision will take place at 9:45 a.m. And technically speaking, we have a cluster of moving averages that are in play here that will form the basis for bullish above and bearish below. More specifically, we have the 100-bar moving average on the 4-hour chart down at 136.53, 100-hour moving average at 136.58, 200-hour moving average at 136.62, and 200-bar moving average on the 4-hour chart at 136.74. We're currently trading below the higher of those moving averages at 136.67. But through the interest rate decision, if the dollar Canada moves below this level right here, it would open the door for further downside. Conversely, if we move back above the 200-bar moving average on the 4-hour chart, the first level to get to and through that I have is 136.90 level. That level corresponds with these highs right here. We've moved above those levels in trading yesterday, but in trading here today, we are reestablishing the resistance level. You can go back in time. There's other times where the price came up to this level as well, or moved down to that level and found support buyers near that level right through here. So get above that level would probably increase the bullish bias. Now we look toward this swing area through here, which is pretty wide at 137.14 up to 137.28. Not that much, 14 basis points. We do have lower highs coming on in the dollar versus Canada. And if we let me take a broader view of this, you can see actually put it on the 4-hour chart. And if we put it on this chart, you can see the 100 and 200 bar moving average on the 4-hour chart here. We have topside resistance up here against this swing area, and this trend line. On the downside, if we move below the 200 bar moving average, you could head down toward this swing trend line down through here. So there you have it, a Kickstart video where to look at 3 major currency pairs with a bonus at the dollar Canada as a Bank of Canada rate decision looms. My name is Greg Michalowski. Good fortune with your trading.